Bring in show music, please.
This is Squawkpod from CNBC, and I'm producer Cameron Costa. On today's episode, happy 30th to the Squawkbox team. Here for the celebration, sports and entertainment entrepreneur Ted Leonsis.
30 years. We've been through a lot together.
Yes, we have.
I'm really proud of you guys.
In the time we've been on air, he's combined the Mystics, the Capitals, the Wizards, Capital One Arena, and more into monumental sports and entertainment. And he's still building.
I just wanted us to start to act like a pre-IPO company. If the time ever came exactly right for us, if it was a Goldilocks moment, yeah, we could consider going public.
Famed stock investor Mario Gabelli, also celebrating 3 decades of squawking.
It's like 65 years for the three of you together.
Where he's looking for capital.
We'd probably be more of a buyer of the pieces.
Those big conversations, plus OpenAI exploring an exit from the Golden State, and Rupert Murdoch's succession fight finally resolved.
He just got married. He's not dying.
It's Tuesday, September 9th, and Squawkpod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawkbox right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. Welcome back.
Thank you.
Nice to see you, sir.
Yeah, good to have everybody together here today.
This was like Succession, but it looks like there's some answers. Media titan Rupert Murdoch's real-life succession drama coming to an end. Murdoch's family reaching a deal that will allow eldest son Lachlan to control the Murdoch media empire. I don't know if that's a big surprise, including Fox News, Wall Street Journal, following Rupert Murdoch's death, which I'm not convinced will ever happen. Reports say Murdoch's children, James, Elizabeth, and Prudence, dear Prudence, will each receive about $1.1 billion in the deal. The drama began when Rupert and Lachlan Murdoch tried to change a trust that would have given Rupert's 4 oldest children equal say and control of the business. After Rupert Murdoch's death. He just got married. He's not dying. I don't want to get remarried, but if God forbid, but if you're like romancing at 93,
90 something.
I think he's 94.
94.
Yeah.
Honeymooning.
Good for him.
Able to go through security. Maybe not to get on there. He may not have to do that, but able to fly around the country, traveling, everything else. It's God bless him. Even Shatner could have a competition. According to an announcement, James, Elizabeth, and Prudence are going to sell their personal holdings in Fox and News Corp over a period of 6 months. A new family trust will go into effect, benefiting Lachlan and his younger siblings, Grace and Chloe Murdoch, who are Rupert Murdoch's children from his marriage to Wendy Deng Murdoch. And I remember Jeremy Strong. I don't know who he was supposed to be in Succession. I don't know which Murdoch child he's supposed to be, but I can just tell you. We talked about the Springsteen movie, and you were asking me about it. He does play Springsteen's long train. He's brilliant. He always is, I think. He takes his roles very seriously, but that's what I thought about that. I haven't told you anything about Telluride. That was well received. The
Bruce Springsteen film.
Yeah, the Bruce. It's a very small part. It's a 6-month period in his life where he was very depressed, considered ending it all and everything. It's not a typical biopic that you would think. And the guy from The Bear. There's 2 guys. There are 2 Jeremys in it, I think. The guy from The Bear plays Springsteen, and he's brilliant. Learned to play guitar, learned to sing, does all that stuff. You know the guy in The Bear. What's his name? You don't know the guy in The Bear?
I know who you're thinking of.
Jeremy. Yeah. There are 2 Jeremys.
Meantime, advisors to President Trump reportedly putting together a report laying out criticisms of the Bureau of Labor Statistics just weeks after the president fired the BLS commissioner in the wake of weaker than expected July jobs numbers. The Wall Street Journal reporting that this look will be at historical job revisions from the BLS following that July jobs report. President Trump focusing his anger on large downward revisions to prior months' employment gains, although revisions from the statistics agency are a common practice. Now, a White House official telling the Journal that the forthcoming report won't be used as a cudgel to force BLS employees out of their jobs, but that is one of the concerns that's been put out there.
OpenAI is reportedly considering moving out of California if the state complicates its bid to turn into a for-profit company. The Wall Street Journal says that OpenAI was caught off guard by the intense reaction to its restructuring plan when it was announced last year. The company is eyeing the ability to raise funds in the future and a possible stock exchange listing as it tries to make that transition to a for-profit entity from one that is currently controlled by a nonprofit. But that nonprofit status is drawing scrutiny from regulators in the state who are obligated to protect their state's charities. An OpenAI spokesperson told the Journal that the business has no plans to relocate from California.
Cheese will be next.
Coming up on Squawkpod, businessman Ted Leonsis on his many team franchises and all the opportunity in sports.
We get higher ratings than a CNN and an MSNBC combined during prime time.
This is Squawkpod celebrating Squawkbox, going strong since 1995. And here's a guy who's been here the whole time, Mr. Joe Kernen.
We're marking the 30th anniversary of Squawkbox this week.
Welcome to the new Squawk Box here on CNBC. I'm Becky Quick, along with Joe Kernen and Carl Quintanilla.
And looking back on some of memorable and market-moving moments, the biggest song was a song I still don't know, Gangsta Paradise? Coolio? Huh?
I don't.
You know movies?
Do you know me?
Toy Story. Sense and Sensibility.
Yeah.
Usual Suspects. I think Alanis Morissette, I think You Ought to Know, was 19. I mean, it was a long time ago. Much more to come. We have lots of memorable moments, I guess, but they all fall by the wayside, don't they, when it comes to family? And I can't believe I can't believe that kid. But Blake, remember Ted David holding Blake? I think she peed on him. But she was literally 3 months old. I think I don't know what we have.
Yeah, all of our kids have been here over time.
Yes, they have.
But they were.
A lot of the moments I remember.
They were
funny
3
moments.
months. They were 3 months, and they're now 25 years old. So it's been really like our life. It's been sort of, you can't really separate work from life.
Tonight, the Washington Mystics are going to face off against the New York Liberty at the Barclays Center. Our next guest is the owner of the Mystic and has been calling the WNBA a growth stock. That's what he told us the last time he was here. Joining us right now to talk about sports investing, the renovation of Capital One Arena, and much more is Ted Leonsis. He is the founder, the chairman, managing partner, and CEO of Monumental Sports and Entertainment. And Ted, it's great to see you here. Also a longtime friend of Squawk Box, so thank you for celebrating this anniversary with us.
Thank you. 30 years. We've been through a lot together.
Yes, we have.
I'm really proud of you guys.
Thank you. Well, let's talk about the WNBA. Last time you were here, you talked about how this is a growth stock. You said you're not interested in the NBA or in the NFL because you think there's a better investing play when you look at all these other sports that you've pulled together.
Well, the NFL is the most important sports league in terms of engagement here in North America, but we look at sports, it's all about digital and globalization, and basketball really is a growth stock. The NHL, I own the Washington Capitals, very, very global. And as we continue to make this pivot to be more of an international exporter of our information, we have to digitize everything. And you're seeing companies like ours. I just saw that Citi had a great buy rating on MSG. We're platform companies. We really look like we're tech giants, and we're trying to get our businesses to be the venues. We're redoing our building right now with a $1 billion renovation, and we're also trying to take all of our IP and digitize it and stream it on a global basis.
You bring up MSG, and there are a lot of people who've been wondering if you're going to go public. You guys have a new announcement out today about Steve Miller, who's going to be coming in as your new CFO in October.
Well, we're trending towards $1 billion in revenue. And we've brought in money from sovereign wealth funds. We've brought in money from private equity. We have some of the most sophisticated investors around. And the leagues are becoming very, very demanding in the means of how you bring in capital. So we announced today a new CFO, Steve Miller. Steve comes from Warby Parker. He's a longtime CFO there, has a lot of experience in consumer and retail marketing, also the ability to finance, banking, private equity, venture capital. We've raised billions and billions of dollars already. And, these have become really, really big, important companies. I look, right now, I'd say we would have a private valuation of $7, $8, $10 billion. As private equity comes more and more into these companies, you're going to see a demand for exits. The public markets really today have not looked at sports as an asset class. MSG, Liberty Media really are the only public companies. So I just wanted us to start to act like a pre-IPO company with all of the discipline, all of the respect to process. And if the time ever came exactly right for us, if it was a Goldilocks moment, yeah, we could consider going public.
What would make it a Goldilocks moment? What would make it right?
I think appreciation that it's not a sports team, that it's more a platform play, that we look like a Oracle or a Salesforce.com. I think the community needs to be educated in what the business is. I also think, to be honest, that while we have lots of predictable growth, 70 to 80% of our revenues are predictable. They're signed over long-term contracts, and they have built-in escalators. But we're not very profitable as companies. And so, we can look at, neither though are software companies and SaaS businesses when they go public. We're having to spend a lot of money in R&D right now.
On R&D on what? On getting the digital platform?
So, yeah, we're building, everyone thinks we're doing a rehab of the building. It's really a physical AI
The Capital One Arena.
Yeah, exactly.
In
it's
Washington.
Next 25 years of how we can sense and respond to 3 million consumers that come into our building.
Like, what does that mean in just in a real description of things? What's going to look different once this is up and running?
We're redefining what
to the consumer, let's say.
What the currency is, and this is all about the consumer, being able to personalize. So I think what Steve Ballmer has been doing in his new building, that upon entry or even as you're coming into the building, we know you're coming. And once you get in, all of the messaging, all of the signs, all of the services should be personalized.
So an advertising play.
Well, it's not so much advertising. It's more of what kind of services. Is it your birthday? Did you gift your tickets to somebody? How can we make them feel more welcome? Are they gaming? Are they placing bets? I think we were the first company to build a sports book within our building. Where we own our network and it streams all of that business, all of our content. And so these have become, I see monumental sports. Obviously, we have to have great teams. I mean, customers are interested in how the Washington Capitals, the Mystics, the Wizards are going to do. Team Liquid, we're the largest investor in an esports, best esports team in North America. The fandom and the engagement around the competition is really key. And that's what fans will tell you. But they're also being charged a lot of money because, just the services have increased. So the building, as I said, we're going to spend $1 billion partnering with our city. We'll probably do $500 million. City will do $500 million. These are big, big investments. They have to have an outcome which is positive, and that will be an uplift in the overall experience. By owning the network, we can now start to look at, yes, we have 20,000 people that come to the game, but our ratings, and I say this honestly, we get higher ratings than a CNN and an MSNBC combined during prime time.
Can I ask you a question about the capital costs of buildings? It used to be that stadiums, for years, for decades, people thought they were an albatross. They were, the teams would say to the states and the cities they needed help to actually do this, that they couldn't make the math work. They'd say we're going to build something, and then they were going to try to create an environment around it, and it was going to be a big thing. And for decades, this was sort of like a failing idea. And something has happened in the last decade and a half. I don't know if it's definitely in the last 5 or 10 years, where it's completely shifted, where live events, and maybe it's a post-pandemic, I don't know what, where people want to be together, that these stadiums are working. It's a totally different situation. And I'm curious what you think changed.
Well, I think just the whole nature of sports and its importance, not only as a convener in the building. We hosted the inaugural at our arena. Our Mayor Bowser, we're the new front door for downtown D.C. We take the social responsibility of reintroducing tourists, reintroducing people from Virginia and Maryland to come back into Washington, D.C. We're the largest taxpayer. We employ more than 4,000 people. These are real serious enterprises. And by bringing 3 million people into the city, they eat at the restaurants, they dine,
What
they
do you
shop.
think's changed about
Now
that?
it's getting safer.
Yes, it's much safer, but I think the federal government and the local governments have seen that these are really the iconic brands. Universities, sports teams, public space. These are really, really defining of major metro areas. Washington, D.C., most important city in the world. We have to have the best building. We have to have the best teams. We export that uniting concept of what sports brings.
So it really is, though, a public-private partnership in terms of building these, because you almost left Washington, D.C.
Yeah, but I was going 3.5 miles away, and I'm thrilled that sometimes the first right answer isn't the best right answer. And being in Washington, I came here in 1973. I went to Georgetown University. It's great. Georgetown men's basketball plays in our building. We can host NCAA tournaments, hockey and basketball. We can host ACC
But it's about
tournaments.
having events as many nights as possible.
Oh, yeah.
You got to fill up almost every night.
Just as it's on national television, as it's on local television, it's building the brand for Washington, D.C., and that's incalculable, the amount of attention that we bring.
Joe was making a joke about it, but does it feel safer? Are you happy about what's going on?
No, it was not a joke.
I don't know if it was a joke or not, but
No, it wasn't a joke.
Well, I think we've been making
because he probably. I know.
We've been making a lot of progress in Washington, D.C.
Really?
All major cities had been challenged, and I'm looking out here at 42nd Street, and but the mayor did a really, really good job. Our new police chief was doing a good job. I kind of see this as a way to really prepare the city, not only for what we're having to do, but next year's the 250th birthday, and there's going to be major celebrations. We host 35 million tourists. We have to position Washington, D.C. as the world's cleanest, world's most powerful, world's safest community, and I think working in tandem between the city and the federal government is the right thing to do.
Ted, thank you for joining us this morning.
Happy birthday. Happy anniversary.
Thank you.
Up next on Squawk Pod, another huge guest from our many years on air, Mario Gabelli.
You had gray hair in 1990, didn't you?
I was 7 foot tall and had red hair when I started. The markets do it to you.
Welcome back to Squawk Pod. Squawkbox is celebrating 30 years on the air with 30 years of the biggest names in business, like Warren Buffett.
LeBron James of the Cleveland Cavaliers writes in, and he asks, if you were ever to buy a professional sports franchise, what would it be?
If I lived in a big city that had a top team, I'd want to buy it there. I mean,
I can imagine Warren playing power forward. Joe, can't you? Maybe some elbows in the paint.
Will he
There
put
you
on
go. Sharp elbows, Warren?
Will you put on one of those Will Ferrell wigs, Warren? Semi-pro wigs? I don't know if you've seen that.
Now let's bring it back to the present, where our anchors Joe Kernen, Becky Quick, and Andrew Ross Sorkin are joined by another Squawk legend.
Our next guest has been a longtime friend of the show, also a media expert who's been with us through thick and thin. So it is fitting that he is here to help us celebrate our 30 years on air. We talked about the markets as well. Billionaire and value investor Mario Gabelli. He's the chairman and CEO of GAMCO Investors. And Mario, truly, you are somebody who predates me on this show. You've been here as a longtime guest host, and we are very glad to have you with us today.
I've been very privileged to be on the show for that long. Add up your years. It's like 65 years for the three of you together. So
I thought you were joking when you said that. I actually did the math.
It is what it is.
When was your first appearance? You were on with Haynes, right?
Yeah, way back.
Back in the day.
About
like
the same time you
hardcore
started,
regular before.
1995. But you were at FNN for a while.
That was 1990 when I got back. I was at FNN
Oh, my God.
prior to that. Yeah.
Nobody counts. It is what it is.
I don't want to count. I know.
Just think about the fact that I've lived through
I
8
was hired
recessions.
at FNN about when I was 11.
Never a doubt about that part.
Mario, let's talk about where the markets are at this point. We'll talk broadly, and I know that you're more of a bottoms-up guy, but just broadly speaking, how difficult is it to find bargains as a value investor?
No,
right now?
because what's happened is that there's a divergence to large cap stocks. So when we look at small, they're beautiful. And to the degree that we see financial engineering at work, that helps in terms of transactions and takeovers. Today, for example, you had a bunch of deals announced already. And so from that point of view, M&A, financial engineering, spin-offs, and looking at pieces. For example, we had a company called Telephone and Data System. It was languishing at $10 or $12. They decided to monetize an asset called U.S. Cellular, now called Adage. And basically, you can see the amount of money. The stock has gone substantially. Take SATS, Charlie Ergen's company. Stock was languishing at 26, 7, 8. Today it's probably 84 bid. So there's always something going on.
Because of the sale
and
of
then you take a company like Zimmer that does body parts. And basically they spun off a company called Zimvi in the dental market. And you're buying it at 10, 12. And it's now 19 as takeover. And then you had simple company, Kellogg. Right. They split up into two parts. Kellanova is being taken over, and the company, Kellogg itself, the cereal company, is being taken over. So there's always some type of dynamic that's taking place.
Okay, let me talk about financial engineering that is not being looked at kindly by majority shareholder, and that would be Warren Buffett and Berkshire Hathaway with what's happening with Kraft Heinz right now. The company came and is announcing the spinoff that they're going to do, and Buffett made the very unusual move of being an investor who he's always a passive investor, but he made the unusual move of saying he's disappointed in this move and he doesn't think it'll work. Do you?
Well, from his point of view, he's already liquefying. Yeah. He's spinning off public companies. He's got a significant amount of cash. And so what is he going to do with that? What is he waiting for? Is he waiting for another cycle, or is he just looking for the bargains? And work in progress.
So do you have any views on Kraft Heinz, on whether you would be a buyer?
Kraft Heinz? Yeah, we think the stock is around 26.7, and basically the split up pieces can be worth as high as in the mid-30s. So
you like the financial engineering?
It's not, we don't like or dislike, we're just observing it, we own it. We didn't buy any recently. We're thinking about doing that. We're having an internal challenge and debate with our teammates. So we'll probably be more of a buyer of the pieces.
Let me talk to you about Monumental Sports and Entertainment. We just had Ted Leonsis here on set.
I listened to it.
Okay, I wanted to get your takeaway on this because they are making moves that will set them up eventually for an IPO, potentially, if the conditions are right. What do you think about the thesis he laid out?
Well, from the point of view of visibility and advertising, they are absolutely center row. NFL, you can own a piece of it. For example, even the New York Giants are selling a piece of it. So from that point of view, what we like is the following. Madison Square Garden Sports. Okay, MSGS has got 24 million shares, 5.5 million owned by the Dolans. At $200, it's $4.8 billion. Are they going to move the center? What are they going to do? Are they going to take the theater and reallocate it? But think about Dolan. Jimmy Dolan spun off a bunch of companies, MSG Networks, MSG, the Sphere.
Right.
The Wizard of Oz is propelling the stock.
People thought the Sphere was going to be.
I'm not saying which one is Scarecrow and Tin Man, but So those are the kinds of things that we look at. Obviously, you guys were kind enough to sign this, okay, baseball. But the answer is not complicated. Betting has also been proliferating since the Professional and Amateur Sports Professional Act was passed by the Supreme Court. And that opened up a new genre. So those are the dynamics. The next part is focusing on soccer.
But wait a second. What about Ted Leonsis's group? You were saying front and center is MSG. What do you think of Ted Leonsis and the play that he's making, which is, look, we like sports. We like being the arena. It looks like they're kind of following what MSG is doing. Are you a fan of a potential company like that would come on market?
Yeah, I'm not opposed to it. I haven't read the details.
Well,
okay?
they're not even going public.
You know, like
yet.
Bally's out, and they're building a theater, a park for the team that's moving there to Las Vegas. Just think of the transformation of Las Vegas as an example. Mm-hmm. Football, hockey, baseball. So those dynamics occur.
And with gambling getting wrapped into it, does that make it more attractive?
Well, it's an element, okay? I always worry about the gambling part of the business, but, you know, Nevada and Las Vegas have the culture and have the regulations in place for an extended period of time. So I'm less concerned about that market than some other dynamics. And regional sports betting and iGaming and so on, they're taking control of a lot of that. So the part of the strip, the northern part, is having challenges. So those are what we think about. And for example, you have individuals like that are taking on Pepsi Cola. Mm-hmm. Then you have that same entity buying $1 billion worth of Genuine Parts. Genuine Parts is 140 million shares and it's selling at 139. It's got a nice dividend, $8 of earnings this year, which are lackluster, but they have 7 pieces, $25 billion of revenues, and they're basically going to look at perhaps financial engineering. Will they split off their industrial products business called Motive, and that's Motion, which is about $9 billion of their $25 billion of revenues, and they will have auto parts, and they compete with O'Reilly's, AutoZone, and several other companies like Advance. And so why are they doing it? Why are they gathering information? Why are they arraying it, putting it together, and taking that approach? And what do they expect to happen out of Genuine Parts? Well managed, with some short-term dynamics that are negative. So, but they'll overcome those.
Do you like prospects for stocks that you can find that can do this financial engineering because you feel like this administration is going to be more friendly to
well,
those moves?
That's a given, okay? Not only that, the tax dynamics, the business entity, in the light of the tax rules that have changed, the bonus depreciation, R&D expensing, EBITDA in terms of an ability to deduct your interest expense as opposed to EBIT before. Those are elements that have now in place so that you can start planning, and that's important. And so those kind of companies that benefit from that, it's not helping earnings per share, it's helping cash flow. So that's significant, a significant element in the planning process. And so you have to like certain types of businesses that are equipment intensive, that get recurring revenues, and obviously what's going on in the entertainment business. You know, whether it's Warner Brothers, whether it's, and even Fox today announced that they're restructuring some of their family trusts. So you have those kind of dynamics.
Where do you see opportunities with what's changing in the media landscape right now?
Well, the first is the Federal Communications Commission is going to change because TikTok is 100% penetration in the country, whereas TV stations can only own 39%. Since I saw you last a month ago, Navis Tegna has been put in play. And you know, Perry Sook has been buying it at $20 odd, and the probability of getting it passed is higher. They're paying 22, I should say. So those are the kind of dynamics we like.
Mario, let's talk about 30 years of Squawk Box, because as I mentioned, you've been here longer than me, almost for the whole 30 years.
Yeah, but we've been on together in Omaha for that period of time, so yeah. It's been good.
Yeah, what are your favorite moments? We've shared some of our favorite moments over.
Well, one of them is always on my mind whenever I attempt to play golf. I had on a green next to the pin, not too far away, with 2 handicaps, 2 strokes that I was getting, and I was playing with someone, and I 3-putted, and it has never forgiven me. That was at Deepdale.
This guy?
This guy.
Really?
He was I was on your team.
I don't.
He doesn't remember.
And I instead of getting an eagle, I got a par.
That's lame, but I've done it. I think
You're more forgiving now.
So you ask about, and then having the three of you.
What year was that? Deepdale's such a great place.
It is.
What year was that?
Throw it over.
Joe. Yeah,
who
testing
signed
my
that?
instant recollection.
Let me see. Throw the ball.
I think
over.
that
I'm
was
gonna take a look
us,
at it.
us
No,
three.
all three of you signed this one.
And then the mug is
mug-
actually
See.
before me.
Fine, you can throw it. I'll catch it.
The
mug is
mug has
before you.
Carl on it.
I know. I know. These are,
Yeah.
it's only.
I can't believe you kept that for that long.
And it's gone through the
fading.
dish.
It's
gone through the
fading.
dishwasher.
Dishwasher.
a
new
bunch
one.
of times. Yeah, we
That's
do
nice
need new
that you
ones.
used it. They got my diastema there, and they got Becky looks like a Bratz doll.
Yeah, we need more of that. Ready?
Go ahead.
Mario, again, we
Thank
want to
you,
thank
Mario.
you. We love having you on. One of our favorite guests.
Lots
Thank
of great
you for
stocks to
being
buy,
here.
and stay focused
you
on
had
it.
gray hair in 1990.
I was 7 foot tall and had red hair when I started. the markets do it to you.
I hear you. I know it.
Thank you, Mario. We
Great
really
to be
appreciate
here.
it. Great to see you.
Again, congratulations on 30.
Thank you.
for being
And
part of it.
I'll be here for your 60th.
50.
Absolutely.
I'm looking at 50.
Okay, so you're a short-termer.
Yeah.
Get ambitious about it. Go to 60.
Let me just do the math. Whoa. I want to look like, no, I'll try. I will try. You heard Putin and Xi talking about getting
Oh, yeah,
organs and
for
stuff and
forever.
living to 150.
Yeah, I'm keeping my organs. Stay away.
Yeah, exactly.
Well, we have a conference coming up on healthcare and longevity as this topic.
Yeah.
And we'll be watching.
That's the podcast for today. Thank you for sticking with us. And thanks to all of you who've been Squawk Box viewers since the very beginning. Our iconic TV show is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin, weekday mornings on CNBC starting at 6 a.m. Eastern. And back in 2019, we decided to package the best parts of that show in an audio format right here on Squawkpod. Please, if you don't already, give us a follow and tune in tomorrow for more squawking.
We are clear. Thanks, guys.